What is the tax-free income for life strategy? So I love this one because there are so many financial instruments. And I want to start by saying this. The wealthiest and the healthiest live in alternatives. And the alternative strategies that I'm going to give you today are going to be shocking because most of you won't know that they even exist because you live in the normal, regular channels. If you took any of this kind of content to a traditional financial firm, they would say, we can't do it. Doesn't mean it can't be done. They don't do it. So you have to find alternative solutions, which is why I put integrated wealth systems and all of our teams together. So let's talk about the income-free life strategies. Tax-free income for life is built through a combination of Roths, municipal bonds, properly structured cash-valued life insurance. The middle class earns money and pays a lot of taxes because they make it, they pay tax, and they get to live on what's left. The wealthy, we create structures so income can continue to flow without a tax consequence. I've seen clients turn $500,000 with the right instruments into decades of tax-free distributions. So let's begin. We got a lot to talk about. With the accounts, I'm actually going to read these, so get a pen and paper. And if you need a journal, go to the show notes and grab one of my YouTube journals because it's about what video, what day you watched it, what did you learn, and what are you going to do about it so you start getting a plan. So the tax-free accounts and instruments, right? Number one is a Roth and a Roth 401k. I have both of these things. You contribute after tax and it grows tax-free forever. So like what kinds of things would you put in a Roth? Like I put my Bitcoin, I put cryptocurrencies in there and I bought them when they were really, really low and they have grown. You can sell off into profits and then buy back in as they get more volatile and drop. Other things would be just stock. Like if you have a stock that's going to go public or stock that might be sold, say you've got stock that's at $1 or $2 and it goes to 10, all that is tax-free growth. In fact, the greatest story about the Roth being used and now there's new rules is the owner and founder of PayPal. So the owner and founder of PayPal put all his shares into a Roth, grew tax-free, tax-deferred into the billions of dollars. So unfortunately, because of that, and it's usually a big single act like that, then the government goes and changes rules. So now you have a couple more rules inside the Roth. Is no asset can grow beyond $10 million or your Roth will implode. So if you have a stock and it's going to be a runaway stock, like right now you have, and I'm recording this in June of 2026, you have Elon's, new IPO. Like that would be cool if you could put stock in there. But if that thing runs past and you buy enough and it runs past a $10 million limit, your Roth will be imploded and you will pay tax on everything inside of it and all the growth inside of it. So you just have to be very mindful. The other thing that has happened with IRAs and Roths is if it's inherited, your kids have 10 years to redeploy all assets inside of it. So it disrupts the basis, causes more tax. So just be mindful how you're using your Roth, how you're using your 401k Roth. And again, neither of them are a tax plan for your corporation. You would want just a straight 401k, not a Roth version, if you want it to be before tax and used for a corporate strategy. So again, you need a tax team to lead you through this. You should not be making these decisions on your own. I don't. I have a tax team. They have amazingly specific software that they can run these scenarios through so you can make better educated decisions. The other vehicles that are tax-free, health savings accounts. So you can put money in from your corporation and your health savings account can give a lot of definition to how you and your family want to use that money. Municipal bonds is interest income and again, gross tax-free and federally they're tax exempt. The middle class starts a 401k. They call it a plan. Wealthy people stack instruments. Now, I'm going to go to the second thing, which is how Roth strategies work across all income levels. So for example, you can start a 401k if you're a high income earner, and then you can immediately convert it to a Roth. And inside the Roth, you're going to grow tax-free. So you want as much in a Roth as you can get, but no, that's going to complicate or just be, it's a different investment tool. It's a different instrument than just having, say, a straight 401k, which is one I have on one of my companies, and you can put up to $88,000 tax-free away. So it's a tax deduction strategy. This is a living tax-free strategy. So later in life, when you start pulling from your Roth, all of that money's grown, tax-free, tax-deferred. So with the Roth, I talk about a lot in my kids' book, the Make Your Kids Millionaires book, that from 0 to 20, if all you did is fully fund a Roth for a child and invest it properly, they will be a millionaire on paper, and by the time that compounds, they will be worth millions of dollars in their 60s if you start at zero and fully fund their Roth. So just be mindful. Your Roth is one of the greatest tools, and we're one of the only countries in the world that have that tool and that vehicle to do it. Your future self is going to thank you later. I use this tool a lot with football players, with pro athletes, is to get a Roth, and fully fund it. You can only fund $7,000, $8,000, so it's not a lot you can put it together. But as that compounds, right, by year 2, you're at 14, just say it's $7,000. I think the limits are $7,500 if you're under 50 and $8,600 if you are over 50. So you can actually do a little bit of a catch up. It's only a little bit of money, but again, compounded, invested at say 12, 13, 15%, you're making millions later for future tax-free pull. So then when you are older and you are taking that money, and if you want to wait till you're 70, when you have minimum required distributions, all of that money has grown tax-free, tax-deferred for your lifetime. So the sooner you do it, the earlier you do it. I always tell a lot of my clients as parents and grandparents, somebody else can buy the toys and all the tchotchkes and all the fun stuff for the kids. I want to buy memories, which is trips, what they're going to remember stuff. And I want them to have a huge Roth at the end of their lifetime. So if they screw other things up during their lifetime, they have some money at the end. So while you're here on this channel, if you're enjoying this content, I want you to subscribe to the channel, click the notification button, be here 5 days a week. I have content in all sorts of areas of money, business, finance. I also have a lot of playlists. So just go to the playlist section and those will continue to be updated. Make your own playlist. And if you want to binge watch the channel, which is even better because then you're consuming more of the content and really getting the concepts, like in tax, you could go to a playlist and say every video that I've ever talked about tax and consume it. If you do 25 hours, we're going to give you $750 towards new tuition so you can start learning this and implementing it deeply in your life. Now, back to the final point. The other tax-free life strategy is life insurance. So cash value life insurance allows you to put money into a policy. Depending on the policy, usually less than a week, you can borrow that money back out. So basically it becomes a bank. So you can borrow money from your policy. Yes, you're going to pay a little bit of interest, but you also are an owner on the dividend side of the insurance business. You actually own the stock. You're a shareholder of the business, so you get distributions. The policy loans are not taxable. They're not tracked. And all the money that you make, so if you actually buy, say, a property and you sell it and put the money back in to pay off the loan, it's all tax-free. So the Rockefeller principle is based on cash valued life insurance where you actually can use it as a bank. It's called infinite banking. If you don't know about it, again, on my playlist, my partner Jason and I have several videos on how you use life insurance as a tax-free strategy for life. So if you have any questions, I know this is a big one. You got a lot to do and you're going to need a tax team. Call our office, 775-588-9200. You can't just get our tax team without getting the entire integrated team. So do a gap analysis, talk to our team, and let's see where your gaps truly are. And overpaying taxes is an invisible pain. If you think about the amount of money that you have overpaid in taxes in your lifetime and you've never gone back to reclaim, because you can go back 3 years if qualified and redo those tax returns. We have clients that have gotten $70,000, $120,000. We had a doctor who actually got $218,000 back in 3-year tax return review because their tax strategist didn't know how to totally use the deductions. So taxes is an invisible pain that most of you probably could be millionaires if you just paid attention to this one piece of your financial equation. If you have any questions, go to askloral.com, ASKLORAL, ask a question, make a request. We'll be back tomorrow.